Hi Howard. The question of one of the big quandaries of our time. So prior to the financial crisis, we've gone through 30 or 40 years where we had high real growth rates, high inflation rates, high interest rates. And since over the last 10 years, the features have been low interest rates because we've had low inflation and low real growth rates. So putting your forecasting hat on, which you don't like to have, is the next 10 years going to be more of the same that we've had over the last 10 years, or are we going to normalise at last?
Well, I have a definite answer, which is I don't know. But, you know, look, this is very hard. I think most of the time the future is somewhat like the past. So, and I say in the book that the four most dangerous words in the world are "it's different this time." And so I would think that eventually we will continue to have growth, and we will get some inflation, and interest rates will work their way higher. And we were going that way for a couple of years until the shake-up in the fourth quarter, and now the Fed has backed down on raising rates and tightening liquidity, and it looks like Europe will follow. And the rate on the U.S. 10-year has gone from, the crisis really started on October 4th when the rate on the 10-year got to 3.25, and now it's like 2.38. So, by the way, so this is really important but unanswerable, is the answer. And I was having dinner with Warren Buffett about